Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just wrapped up our interview with Zach WalkerLieb. Anthony, what's a takeaway or two you had?
I tell you, it's very interesting. I always want to get an update on what's going on with the real estate market, and he had shared his views on where the housing market, but also where the interest rates are going to be. I'm not going to tell you what he said. You're going to have to listen to the podcast. I also asked him the question about these hedge funds and BlackRock and these corporations coming in and buying these single family homes. And he shared the impact that has on the overall housing market and some solutions to minimize that. Or some takeaways that you had, Cam?
Yeah, man, I took some good notes. A lot of information in there. One of the things that I really enjoyed his response to was I asked him if he had a message for maybe a newer investor, somebody that's sitting on the sidelines. You know, what message do you have for them? And one of the things he said is make sure invest in the right amount of time. I thought he was going to say money, right? I thought he was going to say you got to get in at this point to make it work. But he said time, which I thought was a great point. He goes on to give an explanation. Again, I won't ruin it for you, so I'll leave it there. And then the other thing they said is that we are in a housing deficit. There just aren't enough houses for Americans to be buying. And that's what's pushing up a lot of these prices. And he said that deficit is here to stay. It's looking like it's going to be around for the next 10 plus years. So a lot of good information that he shared with you. I got to the end of this, and the message that I took away was, man, just go buy, right? buy as much as you can. Inventory is going to be slim. Get what you can. But guys, we hope that you enjoy this interview with Zach WalkerLieb, managing partner of Willow Manor. They're a residential real estate group focused on luxury investments. Hope you guys enjoy this episode.
Take care.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad, along with Nelson Nash's infinite banking concept. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And today we're bringing back Zach WalkerLieb. Zach, welcome back, man.
Pleasure to be back, guys. I'm excited for today's talk.
Zach, I'm going to throw a curveball at you. And I'm going to throw this at you because I got thrown this curveball the other day, and I want to throw it to you. I was on a call with somebody, and they said, what makes you qualified to give me advice or suggest a strategy about this topic? Mine was IBC, but yours is going to be real estate. So, man, I'm going to tee it up for you, and love to hear what you got to say.
That's a good question. I think that's a question probably a lot of people should ask of the professionals that are going to represent.
Zach, to be honest, I want to hear how he answered it.
Don't worry about that.
He said he did good.
Yeah.
I'm sure he did.
I think that my level of passion borders on obsession with real estate. So I dive into all things that can impact real estate, which is pretty much all news and news cycles. I'm an avid reader. I stay up to date on all topics around the world, geopolitical, economic, and real estate related. But I think the thing that points to my ability to speak on this topic most is my track record as a professional. I've been at the very top of the industry for a long time. My entire career, really. I've reached echelons of top 30, under 30 in the world. Real estate agent when I was under 30 several times. Been top 40, under 40. Have always maintained in the top 1% of real estate agents. And really one of the top producers in the whole state of Nevada.
Awesome, man. And we do know a little bit more about you too. You got a pretty awesome team, right? So you've been smart enough to put a great team together as well. Yeah. Awesome. Yeah. Let's get into it, right? Speaking of kind of current events, what impact do you believe this 2024 election is going to have on real estate policies and maybe in market conditions moving forward?
Well, what you could immediately see was there was a rush from the sidelines that has kind of tapered back off a little bit the last 2 weeks. But you saw from November until early February an onslaught of buyers come into the market. They were like, okay, we know what just occurred. We're excited about it. Here we go. And my experience is largely in luxury or in investments. So I saw a lot of cash come off the sideline and buy all cash. They didn't leverage. They didn't do anything. They just came in all cash and bought. And so you could see that wealth had a renewed faith in the real estate market moving forward. I think that, again, that's kind of softened now that we're entering normal market mode again, which is high interest rates, high cost of housing, everything's expensive. And so the average buyer is not able to afford the average home. That's just the reality of the situation. And so I think that people are positive. That's what I'm getting mostly, even no matter what side of the aisle they're on. We hired a real estate professional as our president. Chances are he's going to be a pretty good real estate guy for us, right?
Mm-hmm.
So there's no talk, and maybe I know prior administration talked about getting rid of the 1031 exchanges and increasing the capital gains tax. Are we
that
safe?
would be disastrous. Yeah.
Yeah.
Yeah. No talks of that. And in fact, I think quite the opposite. I think that there's going to be barriers to entry and deregulation that occurs on a federal level. And, here in the state of Nevada, we've got a great governor as well that's trying to help with housing affordability too. So I think there's initiatives all across the board towards affordable housing. That was the hottest topic, really entering the presidential cycle. Everyone's like, I can't afford a home. No one can afford housing. What do we do? So I think that that's part of his mandate, and I think that we'll see how he does.
Well, there's been a lot of talk of these hedge funds and these corporations coming in and buying these single family homes and renting them out. Love to know what your thoughts are on the impact that is for investors, but also there's been some talks of trying to create some laws to minimize that. Do you have any take on that?
Yeah. So remind me about the law part if I don't answer it, but I want to go into why that occurred first. So BlackRock, all these big companies, they came in and they really, for several years, they were trying to buy whole zip codes in Las Vegas and around the country. They were buying tens of thousands of properties. That is because they had essentially free money. They were given free money through the Federal Reserve and the low interest rates. They were first to the money. So when they released the money, it was at 1%. So they have 1% money. They're turning around. They're going, what do we do with this? Well, we'll buy an asset that's appreciating that we could depreciate in our portfolio, that rent is going to increase over time. And who cares? We're going to cash flow like mad. So what that then did is it allowed for billions of dollars to enter the real estate market and completely wipe out the normal homeowner from competing, because they just ate inventory alive. So in Las Vegas, the pool of affordable homes is like this. What did investors buy? $500,000 and under. So the pool went like this. And the next year, the pool went like this. And the next year, the pool went like this. We had between 30 and 50% investor purchases for a few years. It was wild how many people were outbid on properties by investors. That pool now is this. It's tiny. It's never coming back to market. They're never going to release that product. Maybe 20, 30 years from now, there's some liquidation. But why would they ever release it? They bought it for $200,000, $300,000, $400,000, and now it's $400,000, $500,000, $600,000, $700,000 and cash flowing like crazy. So the pool of available affordable homes got greatly diminished by investors coming into the market and eating everything up. So now to the laws that are trying to be created. Here in the state of Nevada, which is happening elsewhere, they're trying to put a cap on regulation and tax environment. So for instance, a law that's being proposed right now is that 4 properties or less, or 4 units or less, will be considered mom and pop investor. Anything above 4 will be considered institutional.
Wow.
So you'll be treated differently in regulation. You'll be treated differently in taxes. You'll be treated differently as a whole. That is shocking to me, because how many of your listeners are real estate investors that their entire income when they retire is going to be based off of real estate income and in their portfolio? Maybe they own 6 homes. That's it. And so it's not, being frank, it's not a ton of wealth at 6 homes. That's a normal mom and pop investor. Let's say they don't have any stocks. They just have the 6 homes. That's their entire income. And if they're regulated to a severe degree, or they're taxed to a severe degree, you're bleeding it. So, I mean, we can go into a debate about what's the right number, or if a number should exist at all, but 4 is not it. Yeah. You know, even 10 seems kind of low. So this kind of stuff is going to happen. There's such a big push because the imagery that we're all seeing is information about BlackRock buying all the homes in the United States. Mm-hmm. And everyone's against that. Everyone's like, oh, we got to do something about this. And so let's create a law. The problem is we should fix the incentive system that even allowed them to do that, which is the free money that went into the system. Because by the time the average consumer got that money, it was 4 or 5% for a lot of people, which was still great. But comparatively, it diminishes as you go down the ladder, especially impacting the poor and lower middle class. They'll never be able to get out of that. So I would say the approach is not correct the law. It's to fix the financial incentive system that even allows for this to exist. Because you fix that, you do a law, you do a regulation, you just create another loophole, another rabbit hole, another problem, and then you're chasing that. It's never the right action, in my opinion.
Now, that is more on a state level, and you mentioned Nevada. Are there other states that are discussing similar regulation?
You name it. If they're not a red state and they're purple or blue, all of them. You know, the landlord-tenant laws in Portland and Seattle are just ludicrous. I mean, there's been people who say that if a tenant lives in a property, that they're entitled to a share of the equity when you go to sell it for living in the home. So there's laws like that are being proposed because everyone's going mad about this. It's definitely a pressing issue nationally.
Are you hearing anything on the federal level?
Well, this is the thing. I think that Trump is going to make, after he's done with the austerity measures that are currently taking place, Doge and everything else, I think that his focus is going to shift probably around the midterms to housing. It's just my gut feeling on the situation that after, the wars are settled and some of the austerity measures are really implemented in full effect, I think the transition is going to be to focus more on housing as a pretty dire need. I don't think that it's a primary thing on Congress's desk that they're going to look at and try and pass a law on in the next 6 months to a year, would be my gut guess, that they're not going to push some kind of regulatory environment to disbar large investors from playing in the market.
Well, I would think I'd be surprised if they even put the bill in place, because I got to imagine BlackRock and these large corporations that are doing this are also funding the lobbyists, and it'll make it real difficult for them to make law that's going to hurt them.
Yeah. And again, we're in a free market society, right? So this is the ultimate question. Do you punish BlackRock or any other institutional investor for taking advantage of the system that exists, or do you fix the system? My answer is fix the system so that actors that have malinterest or are bad players can't become bad players. Fix the system. Don't attack the person who's taking advantage of it, whether they're evil or good or whatever it is. It's kind of inconsequential at the end of the day. Fix the system first so that they don't have that incentive structure there.
Do you want to increase your returns and lower your taxes? Well, that's exactly what the infinite banking concept can do. This is a game changer, and we can show you how it works.
Book your free call with us and learn how to build wealth the smart way. Stop procrastinating. Go schedule a call now. The link is in the show notes.
Zach, one thing I'm seeing more and more of, and I think the term's called build to rent, where some of these developers, particularly some turnkey providers, are, instead of fixing up an older home, they're building brand new ones. And then the whole community is a renter community, which I happen to have a property in one of those. So I can see it from the investor side.
So it's you doing it.
Okay.
Yeah.
Good point. I would say
Get him.
There are some downsides to doing that. Like, it sounds from the investor side, now you own a brand new home that's run and managed, so less repairs and maintenance. But I tell you one thing I'm seeing, like the whole block or the whole development is your competition.
Yeah.
So I think when it comes to rent, to the rental market, it's more difficult to raise your rents because there's a home that looks exactly like yours that hasn't raised their rent in a while. But that's one issue I've seen.
Yeah. So I'll comment on that. So that's a supply issue. And so what happened in the last few months was there was actually an enormous amount of multifamily supply that got delivered across the United States, especially in the Southeast and in areas of Texas. Huge amounts, thousands of multifamilies got released into the market, and rents dropped. In some localities, they dropped 9, 10%. But you saw some big metropolitan areas where rents dropped 5, 7, again, 10%, because a huge amount of inventory hit the market. So the dynamics that most metropolitans are in, especially on the West, is that there is no inventory. We're not building enough property to house people. So yes, you're competing against the neighborhood, but if there's no other option, who cares? So the reality is that we have no supply. We're underbuilt significantly. And if we want to address affordable housing, we need to have more supply. That's the only solution. It's the only solution available. Any talk about anything else, subsidizing, regulating, doesn't even compare to the impact that having more supply would bring. And the only way to have more supply, especially in the state of Nevada, is to have more land and deregulation. And that would fix the housing crisis that we're currently in.
And even if that happened, we would still be a few years out before everything got developed and built and able to sell.
Yeah. Yeah.
Zach, if so, what I'm hearing a couple things here. If I'm the average investor, right, what I'm hearing you say is that inventory is low, interest rates are high, the market is very competitive. If I'm the average investor looking to get in or to acquire more, what message do you have for these guys, right? Is it, hey, just wait 3 years, 4 years till we get more supply, or is there something that you can give them a little insight on?
My question would be, do you see more supply on the horizon? We are so vastly underbuilt that now, not necessarily in new homes. So new homes, they're priced at a higher level. So they're typically upper middle or luxury purchases now, new homes that are being built, depending on the metropolitan area. So we may actually be overbuilding that because there's not enough consumers for that market. But the average home and below, we're vastly underbuilt. And remember, most metropolitans are experiencing that same thing, where the available property count is greatly reduced over time because of investment into it. And new product is just, it simply isn't being built. Like, you're not entering a new market as a developer and building a $250,000 home. You're entering a new market and you're Toll Brothers and you're building $1 million home on average, right? So it's not being restocked. So not only is it being eaten alive, it's not being restocked either. So the inventory problem is here to stay. If all things stayed relatively the same, we are going to be in a housing crisis for a decade plus, where housing becomes unaffordable for everyone to enter the market, unless you are at the upper echelon of society. So right now, consumer confidence rests almost entirely in the upper echelons of our country. The top 4% make up like 46% of purchasing currently. They're the drivers of the economy, is the upper end. I'm seeing it in real estate. I'm seeing it elsewhere. So if my suggestion would be, get in. You may see a downturn with everything that's going on, but the downturn in real estate is going to be rather short-lived and, in my opinion, minor. Commercial is a different issue. That has more risk exposure, especially in office. But in residential, normal cash flow investment, I think that pricing is only going to go up for the majority of metropolitans across the United States over a 5, 10, 15-year run. And so if you can afford something makes sense to you, the monthly payment makes sense, the rent covers your monthly cost, you got to look at the whole picture. Do you get depreciation? How does it look in terms of your entire tax and investment scenario? And chances are, even if you're making money on the long, because there's appreciation and there's depreciation on taxes and other financial benefits there. So I think that the best thing is get into what you can afford and ride it for the long term. Again, you may have some turmoil in the near term, 1 to 2 years, but really I think that the long run is just a definitive at this point.
Well said.
Good advice.
Yep.
Well, speaking on that, what advice would you give somebody who is new to becoming a real estate investor?
Be cautious and invest the proper amount of time. Don't just enter it to enter it and be like, okay, I got to do this. Let's throw some money at it. I would say first come to a deep understanding of what real estate investing looks like and how to make sure that your properties are cash flowing or they're in appreciation zones, whatever your model is, it's the right investment. So spend time gaining knowledge, talking to other professionals, getting a sense of the market that you're going to go into, and then enter it. Don't just go, okay, it's a get rich quick scheme, because it's not. It's a long-term play.
Perfect. Looking at a little bit longer, what sort of things can you see that could disrupt the real estate market as we know it?
So this is the National Association of Home Builders actually lobbies against the release of land because they want to maintain high levels of pricing.
Mm-hmm.
So they lobby against the release of land. If the release of land occurs, federal land is a huge avenue for success in affordable housing. Because if I can get a piece of land for $10,000 an acre, I could put a $200,000 home on there. If all the land, which it is in Las Vegas, is $1 million an acre, you can't put anything on that besides $1 million homes. So we need the cheap land. If the cheap land is actually released, and if Trump does that, it would be the biggest thing for the American dream in decades, in my opinion. I think it's the single most important thing is to make housing affordable again. That comes again with supply potential and deregulation. And so if the release of land occurs, you could see pricing both in rentals and in the cost of housing drop in major metropolitan areas, because you could have a development of 50,000 homes rather quick. I mean, you could turn on a faucet. Developers would come in and build. And so I would expect a pretty meaningful impact if that occurred. I'm for that. I think that we should all be trying to achieve the American dream. That was once achievable. Now you have to be wealthy. You have to be wealthy to buy a home or invest in real estate.
What's your sense on long-term place for interest rates?
We're here to stay, unless something very meaningful happens in the market, or the austerity measures that are taking place are actually significant enough where we reduce the expenditure that's going out the door. Inflation is a behemoth. We printed 40% of all the dollars ever created in like a 1-year period. It's astronomical, the amount of money supply that entered our market. That's not going away. It's not going away. And again, most of that money, smart money, said, I'm buying an asset. I'm buying something of value that will ride the inflation and appreciation. So you had assets just get gobbled up. And so what did the person who didn't have the capital to invest in assets, they got left behind. So inflation is here to stay for a while. It may moderate a little bit, but I think that's going to demand that interest rates stay relatively where they are. A fall to something like 4% seems like it will never happen again in our life, in my opinion, absent something catastrophic. And again, absent the government not learning its lesson, which is probably a reality, that the more financial intervention, the worse off things are just a couple of years later.
Yeah.
It's a short-term Band-Aid. So I think we're relatively where we're going to be for the next 2 years, 1-2 years. We have a big economic downturn. Yeah, you could see rates go into the 5s. Everyone gets crazy. Politicians get crazy. Federal Reserve gets crazy. And they're like, just drop it. Let's go again. Turn on the money machine. Yeah, I guess we can get into the 4s and 3s. But that'd be turning on the money machine again. And here we go all over.
Big inflation, which means that's right. When you want to own real assets like real estate, that will not only appreciate with inflation, but so will the rents.
Well, and it would exacerbate the issue with BlackRock, right? Or others, as they would then come back into the market because they're getting it at 1-2%. They're eating up what you would eat up at 3 or 4%. So,
Zach, we did an interview with a guy in oil and gas several weeks ago, maybe a month or so ago.
Somebody?
Yeah.
Tom Wilwright?
Yeah.
Is it somebody? Okay, all right.
And at the end of it, my takeaway was, man, I'm still not comfortable investing in oil and gas. We're approaching the end of this interview, and all I want to do is go buy real estate. So if somebody's out there, they're listening, man, they want somebody local, somebody expert here in Las Vegas. Who can they find, or how can they reach you, I guess is the question.
So all of my social stuff is the team. So Willow Manor LV. Mm-hmm. So Instagram, Facebook. We've got a YouTube channel as well. You can call me on my personal number, which is 702-743-9998, or visit us online, Willow Manor Group. But the good news is, I've developed a network of professionals around the country as well. So I work with people in pretty much every metropolitan area and have a very strong network. So if you're interested in investing in Mobile, Alabama, I've got someone for you. pretty much every area. So I'm happy to connect you to the right people nationwide as well.
Zach, I also heard this rumor you're starting a new podcast. You want to tell us a little bit about that?
Yeah, we've got 4 real estate professionals, all great guys. And I'm not sure if you're familiar with the All In podcast, but we kind of themed it after that, where we've got 4 squares, and we're talking about we're just talking about real estate and impacts that are going to be had on the market from all the different things going on. So it's called The Closing Call, and it should be out, our first episode, in the next couple weeks.
Well, that would be about the same timing as this dropping. Zach, is there any question we should have asked or anything that you'd like to say before we wrap up?
I think there is hope. I think that we are tumultuous right now as a country, but my belief is that the American people are incredibly resilient and know how to figure out a problem. I think that we have, love him or hate him, a once in a millennia figure currently leading the country, and things are going to be shifted one way or the other. Change is coming. And so hopefully that change is for the good. And hopefully there's a restoration of the American dream and the potential for American greatness. I think that if all things go well, that's what I foresee. And, I do think that if you spend the time, you look at things correctly, you're conservative elsewhere, you can invest in real estate and you could build incredible wealth. And it's still there. You just have to pay a little bit more attention to it. So I believe in the American people. I believe in this market. And I really think that we have a great path forward.
Awesome. Well said. Zach, thanks again, man. Appreciate you coming on.
Thank you, guys.
Go make it a fantastic day. If you like this video, I know you'll like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.